you brought up AI. I'm curious on what your feelings is. Like when I got started, I got into the crowdfunding age of real estate, and then it went from crowdfunding to where the conversation shifted over to tokenization was like a hot topic for a minute. And now it's AI is the hot topic of like how to use, and you start seeing some of these syndications come out and they're almost like advertising like, oh, we're one of the first AI based. And to me, if I know how the crowdfunding thing ended up, it ended up pretty bad for me. So I thought tokenization had too many tax issues to be viable. And then it's all about AI. When you see that, what do you think when you see AI as it's almost like an AI company that does real estate type of thing instead of a real estate company that uses AI? Like, what do you think when you
that's our category, right? So I think there's a lot of that hocus pocus stuff that none of that makes any sense to me. I remember the whole crowdfunding thing, and then I remember predicting the crowdfunding companies' bankruptcies, and then I remember watching crowdfunding companies go to bankruptcy and listening to people's stories about how they lost money in their crowdfunding deals, and I think like, saw that coming. So none of that was a surprise. The tokenization thing, that went right by me. I missed that one completely. I heard a couple words about it, but that was a flash in the pan. I think maybe there's going to be some future towards blockchain having some kind of involvement in real estate title. Perhaps I could see some of that, but I think that all that's a long way off, in my opinion. AI company that does real estate, to me, that's just another fintech company. Disaster in the making. And we've seen all sorts of fintech companies raise a lot of money and then fail. Not surprising. Real estate's an old business. It's been done an old way for a long time. Everybody wants to find a new way to do it. And I don't know, to me, I'm just old. So the old way works. So why mess with it? The AI tools that we use is ancillary. It has nothing to do with our primary business. It's just simply a way to help speed up our decision-making process on how we price our inventory. And I think that's something that we've been using for a long time. It's not like we just instituted this when ChatGPT came out. We've been using this software suite now for, I think, about 3 years. And it's been around for even longer than that. We were a little slow to adopt it, I would say. I remember there was companies that had adopted it 5, 6, 7 years ago. And I'm like, oh, great, here we go. This is going to blow up in their face. And then it got tested and it proved itself. And we found that it actually was useful. But as you said, this is ancillary to the business. It's not the business.
Yeah, I think it's always bad when you look back and you say, well, that investment went bad because they couldn't do another venture capital raise. That is not what you want to say when you're investing in real estate. You're investing in real estate because it's buying a hard asset. I think when I was researching my book, like apartment buildings go back to like Roman times and thousands of years, actually the cheapest apartment because you have to walk up all those stairs. But it goes back thousands of years. So whenever they try to do a spin, and I fell for it with the whole CrowdStreet when I was starting out. But now whenever I see something like this, I try to warn like my investors out there and everything like that. If you're investing in real estate, make sure it's real estate. A lot of these tech companies, like they're tech companies. And right. You see what happened with the lending. I don't want to mention any names. There's a really big lending company that it was actually hard to even get a portfolio built up because they were raising so quickly. But it's like when you see that Silicon Valley, like the San Francisco headquarters, I just like, wow, that's there.